Hey guys, what's up? Spenny here. So in today's video, I'm covering a very highly requested SPAC. Now that SPAC is Folly Transamine. The ticker symbol is BFT. But more importantly, the company that they're bringing public is PaySafe. Now this SPAC has been covered a lot by many other YouTubers, so I'm not going to go too in depth of what they do. I'll just do a quick overview of what they are, and then the actual objective of this video is that I'm going to compare it to its peers such as PayPal, Square, a couple other well-known companies, and then I'm actually going to do a price prediction for the year 2025. Now, we're going to be able to do this because this company actually has revenues. They're well established. They've been around since the 1990s. So we'll be able to somewhat accurately predict what kind of return on your investment you can make over the next few years. So let's first get into what they do. So PaySafe is essentially a fintech company, very similar to PayPal, Square. It's got a little bit of uniqueness to it though that I'm going to cover. But that's the industry that they're in. Now looking at this slide here, it says highly differentiated business to business and business to consumer global network with a powerful suite of digital wallet, eCash, and integrated processing solutions. They also talk how they have significant growth opportunities. The TAM is massive in this industry. Fintech's expected to grow a ton over the next 10 years. So as long as they can take a piece of that total addressable market, this company should be fine. But that is a big if, and they still need to succeed to actually manage that. And I will be getting into that because remember, this isn't a brand new startup. This is a company that's been established for a long time. Something to consider when you're investing into this company. It's not a brand new high growth stock. It's really not. And if you look at the bottom of the screen, you can see that they're estimated about 1.5 billion in revenue for the year 2021, and they're expected to grow organically at about 11%. So it's not a super high growth stock. It's growing fairly slowly. They don't have a ton of revenue considering how long they've been around, but I'll get more into that in a second. Now, one thing I do really like about this company that is actually high growth and growing very fast is their iGaming eCash network. So this is a proprietary digital currency solutions empowering online, mobile, and in-app commerce for gamers and cash consumers. They have presence in 50 plus markets, and some of the big names that they're involved with is Fortnite, Twitch, and Spotify. That is one thing I really do like about this company. Now, so that's just a quick little overview of what they are and what they do. It's not too complicated, but I do want to get into their valuation. So to me, this is one of the most important parts of investing. You need to be able to put a value on a company so you actually know what kind of return on your investment you can expect. A lot of investors don't do this, and to me that's just gambling and guessing how much a stock is going to appreciate in the future. So let's get into that. So the first thing we want to start with is what's its current market cap? You can see here when it first came public, its market cap was at $7 billion, and that was at $10 a share. Now, since then, the stock has appreciated about 50%, so that is 50% higher now. We're going to go back to that in just a second. These are just numbers we need to know when putting a value on this company. Another really important thing to note is how fast this company is growing. Now, from 2018 to 2019, it grew at about 13%, and then over the next few years, it's expecting about 11% growth. So nothing too crazy here. That means this company is not going to trade at a super high premium. It really shouldn't. It's not a high growth stock. And actually, surprisingly, it compares it to its competitors in this slide, which shows us here its organic revenue is 13% for PaySafe, PayPal is 19%, Nuvia is 17%, and then Shift 21%. So you can see the average is between 18 and 20%, and PaySafe is significantly lower than that. Now, this is something that's really important to note. This company isn't even growing as fast as PayPal, and PayPal is a massive, very established, safe stock. Don't worry, I'm gonna give a lot more in-depth of a comparison in just 1 second. So the first company I wanna compare PaySafe to is PayPal. Now, PayPal is the leader in this space. They're a massive, established company. It has a market cap of $279 billion. And what we want to really look at here is what price to sales ratio does PayPal trade at? Because this is going to be important when we pick a price to sales when projecting out PaySafe's revenue. So PayPal is traded between a 7 and a 13 price to sales ratio. Now, another thing we need to look at is how fast is PayPal growing to justify that price to sales ratio. And we look at here, the current year PayPal has grown at about 20% and next year around 18%. So it's probably gonna just keep around that 20%. And do keep in mind, guys, this is actually higher than PaySafe. PaySafe is expected to grow between 11 and 13%. Technically, PaySafe shouldn't justify the same price to sales ratio of PayPal. PayPal is growing faster, it's more established, it's best of breed, it has a lot more things going for it. So looking here, the top part is for PaySafe, the bottom is PayPal, and this is for comparison, guys. So BFT has a share price of $15 right now and a market cap of about 10.8, and its current price to sales ratio is 7.7, and that's based off 1.4 billion in revenue. Its projected revenue growth is only 11 to 13. And when comparing this to PayPal, its share price is 238 with a market cap of 279 billion, a price to sales ratio of 14, so it's about double of PaySafe, but it is justified, and I'm going to show you guys why that double PS ratio is actually justified. So PayPal is expected to grow between 18 and 20%. Now, that is almost twice as much of what PaySafe is going to grow at. I realize it's not quite twice as much, but it is quite a bit higher. And not to mention, by investing into PayPal, you're taking away a lot of risk. You got to understand, PayPal is best of breed. So you're not investing into a speculative company. It's a highly established market leader. Another thing, it's very profitable, and it's going to continue to be profitable. It's probably not going to ever be unprofitable again. And just the cherry on top is that they're investing into Bitcoin. Their Bitcoin expansion, I mean, who knows how fast PayPal can really grow now that they're entering into that market. And also, guys, the way that this would all change is if BFT was a brand new company that was going to go into hyper growth mode. But the reality is BFT or PaySafe has been around, I believe, since 1996. And PayPal has been around since about 1998. So you can see PayPal has significantly outgrown PaySafe. Now, there is one scenario where PaySafe could be a really strong buy, and that's if it can grow at 20%. If it can grow at 20% and it has around a 7 price to sales ratio, then you're gonna make a lot of money on the stock. And I could theoretically see that happening. If their e-payments in the video game space really picks up and grows really fast, maybe they can grow at 20%. But that is very speculative, and we don't know if it's going to be able to meet that. So, in my opinion, PayPal is the safer and better buy right now. And also, I want to show you guys a red flag in their investor presentation. So you can see here in this slide that they're saying that their business is resilient, that even through this health crisis, they haven't lost revenue. They're still generating around 1.38, 1.39 revenue annually. And they lay this out on the right-hand side, and you guys can look through that. But to me, this is actually a massive red flag. You see, yes, they managed to be resilient through this, but that's not looking at what their competitors have done. Their competitors have thrived through this health crisis. The fintech space hasn't been hard hit too badly from this at all. I'll show you guys that just in a second, but their competitors have managed to grow revenues a lot. So when I see PaySafe can't grow revenue during this crisis, it actually means that they're weaker than their competitors. So keep that in mind. And also looking at this slide, you can see that their revenue growth is actually really slowing down over the past couple of years. So it says here that in the year 2017, they brought in 864 million, and they grew that to 1.4 billion by 2019. That's representing a 27% CAGR, which is great if that actually is what happened. And don't get me wrong, it is what happened, which is great, but that's not considering that they've really slowed down since that. From 2017 to 2018, they grew from 864 million to 1.2 billion. So that year they grew great. But then after 2018, that growth massively slowed down. From 2018 to 2019, they grew from 1.2 to 1.4 billion. So a lot less, guys. And then obviously 2019 to 2020, they haven't grown at all in revenue. and their 2021 estimates is expecting not to grow again. It's supposed to be around 1.5 billion. So hardly any growth here, guys. It's really slowing down, and they're really struggling through this pandemic. Meanwhile, all these other fintech companies are doing great. This is something you guys might want to pay attention to if you are invested into PaySafe. So if we compare this to Square this year grew 312%, and next year is expecting to grow about 38%. And this is one of their main competitors. And you can look at almost every fintech company, it's pretty much the same thing. If we look at StoneCo, this is a company that I'm invested in, I've done very well with. This year they've grown at about 33%, and next year they're expected to grow at 53%. So this year actually did hurt StoneCo a bit. Instead of growing at 50%, they grew at 33%. But still grown, guys. And next year they're expecting to bounce right back. So to me, this is really concerning, and this won't matter if PaySafe can prove all of this wrong and if they grow 20+%. If they grow 20+%, then yeah, I think you're gonna get a lot of return on your investment in this stock. But if they only grow on how they're projecting, I think your money is better off in other fintech companies personally. What this company really reminds me of is Dropbox. Dropbox is that old, slow-growing, pretty decent value company. It's a pretty safe play. You're probably gonna make a bit of money over time, but it's nothing too impressive. To me, that just really reminds me of Dropbox. Obviously, different business plans and different business entirely, but the way it's growing, the way it's established, everything just reminds me of that. So yeah, guys, to sum up this video, to me, BFT isn't a buy. I think there's just better fintech companies out there. Doesn't mean this is a risky play. I think you're gonna make money on it. It's really not a high-risk stock at all. It's a slow-growing, very established company at a pretty decent valuation. So it's not that I don't love it. I just think there's better fintech companies out there. Anyways, guys, I hope you appreciate this video. Make sure to drop a big thumbs up if you found it informative. And as always, make sure to subscribe if you want to see more content like this. Thanks for watching till then, guys. I'll see you in the next video.